is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Oh, look who we have.
It's a beautiful day. Got our man, Jim from Minneapolis. We gonna take it by storm?
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
Yeah.
holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We're here 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Make it a great week, folks. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials down 9, NASDAQ up 27, S&P's up 3.5, gold contract up $14.40, trading at $15.66 an ounce. Silver up 2 cents, $18.17 an ounce. Light sweet crude up 16 cents, $63.21 a barrel. Notes and bonds. You get the 10-year down 5 ticks, 129.07. The 30-year off a half a point of 15 ticks, 157.26. And King Dollar. King Dollar down 164 ticks, trading 96.674. The euro is at 111. The yen is at 108.5, and the pound is at 131 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Well, you know, markets, folks, we've been talking about how deviant markets are. Bottom line is that you're seeing it in spades, okay? So if we, first off, you take a look at the SPY, what you're going to see out here. SPY shook it off on Friday. The S&P was down. We had a spread. Well, actually, let's go to the S&Ps so you can see how dramatic the spread was and exactly what we're looking at out here. So on Friday, when they took out the Iranian general, you had the S&Ps basically moved down 57 points. Okay, we went from 3263 to 3206. Bottom line, rejected lower price on Friday. Market came halfway back. What do we do out here this morning? Bottom line, you get into the lows, you reject the lows. This market still wants to go test the highs that were generated out here on Friday. Pretty amazing, but bottom line, it is what it is. The NQs, if we take a look at the NASDAQ and the NDX 100, folks, leads the market higher, leads the market lower. Bottom line, NQs out here, what they had done last Friday now, they broke topside and they had the volume behind the move. What's going to be intriguing in here inside the NASDAQ composite as well as the NDX 100 is that they had taken out your swing point from the 27th of December. They had the price move, they had the volume move, and that's a monster ABC structure on the way up. So the real question is going to be, do we just get a test of these highs out here, or in fact, you know, the ABC is not broken, meaning that this price projection is a very large price projection. Inside here, I'll go over to the NDX 100 since we'll use the 3 Qs, and you'll see what we're talking about here. You know, your B point on this is 214.56. Your A point, I'm going to bring that back down to the December 3rd. Now, if you're looking at my chart from December 3rd, that was a bad tick on the way down. They haven't fixed it. Bloomberg hasn't fixed it, which I'm really surprised. But the bottom line, I know it's a bad tick because I remember when it popped up. So your B point on this is 214.56. Your A is 202.14. I'm just going to ballpark that. So you get about $12. That'll bring the Qs of 32, no, 22. that'd be like 222. And right now, you're at 215. So bottom line, you can get a lot higher inside the NDX 100 as well as the S&Ps. Your small caps, bottom line, July of 2018, they still can't get traction. Pretty amazing, actually. You're at 165.48. When you take a look at these small caps out here, the high that was generated was July of 2018 at 173. Yeah, and we'll see whether it's going to basically go for it, but hasn't been able to get any traction, and that's with many equities at all-time highs. The mover inside the NDX 100 today, Google. Google's a monster, man. Google traded to $13.96 today. You're still up 28 bucks. You're trading at $13.88. Notes and bonds, they continue to want higher price, lower yield. And each time that the market tries to run them off and write them off, guess what? They come right back. And what you have out here now is if we take a look at this 10-year, November 7th is your benchmark. We had come down hard November 7th, come down almost 2 points. And the 10-year, which is almost unheard of, you got a 1.5 down full out. We came back. We tested that on the 13th. It rejected that low, goes topside again, came right back at us, and then retested it again on the 19th. Now, the 19th of December, folks, that test was on anemic volume. So when you get down into the price area of 127.5 inside the 10-year, there's no sellers. And the 127.5 correlates to about 2.9% in the 10-year. And once they get down there, the bottom line, the market bottom line starts buying them hand over fist. And you can see it on Thursday and Friday, contract value went up from 1.2 million contracts. On Friday, we did 1.8. Bottom line, this is building cause now to break the small consolidation at 130, and it looks to me like the 10-year once again wants to get up into the 132. If we go take a look at the yield chart, what you're going to see inside this yield chart, you know, most times, well, you almost got to go back 10, 15, 20 years now for not volatility inside the bond market. The bond market, folks, is so volatile now, it's just amazing. We've gone from 1.94 on Thursday down to 1.75 this morning. That's quite a move. That being said, guess what? The way this is set up, it looks like the game is going to be on once again down to the 1.50 mark, and we'll see where this whole thing is going to shake out. Gold contract, bottom line, monster move in here. And what you're going to see in gold, folks, is this. We haven't seen moves like this in over 20 years. And what I mean specifically, geopolitical moves. There's been plenty of geopolitical situations also, and gold didn't move the same way. You know, I've been doing the gold report for, what, 24 years or something. This is going to be a whole different year for gold. I do think we're going to go take out the highs over that 1900 area. Bottom line, you did 100% move or move. It gets over the September highs, gives it up in price. What does that set up? That sets up pullback. You know, inside the gold market, what I expect we're going to see is that it will pull back with light volume, build more cause to what? To go topside once again. Stay right there, folks. Everything's green. Sherwin-Williams, they went to Sherwin-Williams. They got that green. They're painting it nice. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow just turned green. That's up 7. Nasdaq's up 36. S&P's up 6.5. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve does an outstanding show here every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, the Mastering Probability. Now, the way you get Mastering Probability, you come over to our website at TFNN. You go into newsletters, you'll see Master Probability right there. You can subscribe to Mastering Probability for $149 for 1 month. You can get it for 6 months for $695, which is a savings of $199. You can get it for a year for $593, which is a savings for $1195, and save $593, which is a savings of 33%. Great newsletter, folks. And as you know, Steve was the #1 market timer, according to Timer's Digest, in 2019. And in 2020, folks, okay, the bottom line is that you got to get the decimal pen out because we got to go 3 decimals, okay? And he missed it by, he's #2. What do he missed it by what? Is it 3/100ths of it's sad. It's great. Yeah. Congratulations, man. But well, Tommy and I are looking at it like, you got to be kidding me. Yeah, it's 3 decimals, right?
Yeah, it is. It is. I told you when we were talking last week that it was going to be touchy. You know, that it was really going to be close. So
right.
The action on anyways. Look, you know what? It is what it is. It doesn't necessarily.
Listen, it's very unusual that anyone gets it 2 years, folks. It even gets close to it. So
it would have been nice, but you know, the reality is that the run lasted about 2.5 years. So which is a big run.
Huge.
You know, and the great news is, Tom, is that you've created this platform that allows myself, Larry, David, Basil, yourself, you know, and others to really share with you tools that work so that we can kind of cut through a lot of the noise in the media out there and just be able to interpret the charts. And what I really love about what you've done is that, you know, there's no assignment that gets sent out to everybody and says, you know, we need to do things a certain way, or we need to be on the same page. You allow everybody to give their interpretation in reading the markets and what they mean. So for that, really, the kudos are to you. You know,
you guys are all doing the work. I appreciate it, though. No doubt.
Yeah,
no doubt.
No, and it's great because look, the great thing is that we use our standard standard tools, but the markets are always changing. You talked about lots of volatility to anticipate in 2020 in the gold market. It's probably going to be all of the markets. And then the last time that you and I spoke last Monday, we were talking about all the my concern about 2020 and the patterns that we're setting up there.
Yes.
And I wasn't really sure what the trigger might be to move us into the potential of a 2020 bear market. But last Friday, and you'll see as we go through these charts here, which I wanted to talk to you and our listeners about war, its impact on the stock market, because there's enough situations where we can go back so that we can understand what could unfold here. And that's what's really important. So,
Cool.
you know, so that's what I want to take a look at just simply historically and specifically with regard to the Dow, how the market has behaved as the tensions here are a little bit heightened,
elevated,
so to speak.
yes.
So let me actually get over to where's my cursor? Let me get to these actual charts here so we can begin taking a look at war and its impact on the stock market. So here's the stock market. Now, the stock market, as you know, and you've said this many times, it absolutely hates uncertainty. Well, it truly hates the uncertainty of war. And bottoms, what I have found as we go through some of these charts, or what you'll see is that bottoms don't form until the market senses a positive resolution to the dispute. In the den, they're not seeing it. Maybe the guys in the production room can get this chart up here, or some of the others.
Do you guys have Steve's charts, Al?
So, and I'm sure they're on Tiger TV, but so bottoms don't form until the market senses a positive resolution to a dispute. So whether it's a war, whether it's a skirmish, whatever it might be. So we go back to World War I, so we're back into 1914, just so folks can get a feel for this. So here let's take this all the way to World War II. Let's take a look at the attack on Pearl Harbor on December 7th. And so we can see where the market was at. And it was really the Battle of the Coral Sea on May 7, 1942, where where stock investors sensed a potential of a positive resolution. It doesn't have to be the end of the war, what have you. It's just about, when I take a look at the charts here, it's really about the market sensing some type of positive resolution. And if we take a look at the Korean War, we can see here where the North Korean People's Army crossed the border back on June 25th, 1950, what the stock market was doing. We can see that it was when Task Force Smith stalled the North Korean army that the market sensed a positive turn.
Pretty
and
wild,
hence,
huh? Yeah.
It is, and hence the bottom. And that's really, so this is how we can use news events versus the way that people might be interpreting things in the market. Here's the Cuban Missile Crisis. And so we can see when it began, when the Cuban Missile Crisis is over, and then the market just simply continued there on a nice bull run. If we take a look at the Persian Gulf War, we can see what the market was doing when the Iraqi forces invaded Kuwait. We can see when the reserves were called up. We can see when Operation Desert Storm was. And so it's just about being able to sense a positive resolution. Here's 9/11. Now, I have a whole set of charts. I couldn't find them all. But what I can share with folks is that terrorist attacks are different than wars. And when we go back and we actually take a look at terrorist attacks, the moves typically are over rather quickly. I don't know the reason behind that, Tom, but whether it was that the one attack in France, Hebdo or something like that, when they walked in and shot up, right? But if you go back and you take a look at terrorist attacks, they respond differently than actual wars. Here,
that's great information to know, though. That's huge.
It is, because we know, unfortunately, we're going to have more terrorist attacks, and we're going to see the market, move lower. But the ability to be able to differentiate the terrorist attack from an actual military incursion, a war, what have you. Here is the Iraqi invasion. Here's where we see the mission accomplished, so to speak, out there back in 2003. And so that threat of war is occurring right at a time when you and I have taken a look at it. Last week we said, hey, if this were to work like this, the actual January seasonal high would be today. Now, I'm not calling that today because there's other factors that you've talked about in your show, things that I talked about in my show this morning. And on Friday, what the market did was it generated for me a confirmation of top. And that top was the Rhodes Momentum Indicator top. Here's the ES Mini. It also had a 1 to 1.618 A to B equals CD. And it does that. I wait for some type of bearish reversal candle. We got that on Friday.
Yeah.
So the question would be, is now the time to sell? Has the change in trend occurred? And my answer to that is no to both. And the reason is, I use these wonderful tools. You brought John Logan and his group into the fold here. And once I saw those tools and how they worked, they're really great for being able to, when there's a topping pattern that's in place, it's the responsibility of sellers to push price down to support. And if we take a look at this chart here going back in the beginning of 2019, you'll see that it moves just back to, these are just the bottom of the profiles that I have out here.
Yes.
Price must break through support in order for there to be a change in trend. And I realize we're just about to run out of time here, but if we take a look at what has transpired last Friday, we've got a brand new market profile in the ES Mini. It's 32.16. Price must close below that for there to be any possible change in trend.
Gotta love it, man. Pretty amazing. Pretty amazing. Well, listen, man, congratulations again.
Thanks, Sam.
Amazing feat, no doubt about it. Folks, come over to our website at TFNN. Go into newsletter, see Mastering Probability. Check it out, 30-day money-back guarantee. Steve, have a great one, safe one. We look forward to the show tomorrow.
Thanks, Sam.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN has put together the best lineup of live content for traders by traders every market day, featuring some of the most knowledgeable and respected minds in the business. TFNN broadcasts 5 days a week live from 9 a.m. until 5 p.m. Eastern Time. We have live programming every market day during market hours. Every morning, Larry Pesavento kicks off the trading day live at 9 a.m. and breaks down the opening bell with Trade What You See. At 10 a.m., Tom and Tommy O'Brien host the TFNN Bull Bear Trading Hour, followed at 11 a.m. by the team at TD Ameritrade and Thinkorswim with Fast Market. Basil Chapman hosts the Tiger Technicians Hour at noon, Steve Rhodes at 1 p.m. with the Trader's Edge, Dave White at 2 p.m. with the Power Trading Hour, and Tom O'Brien anchors the daily lineup from 3 till 5 as host of the Tom O'Brien Show. Tune in to TFNN's Tiger TV on your computer or mobile device, and you can always find us streaming on YouTube. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is flat. NASDAQ is up 31. S&P's up 4.5. Let's go over to Pier 1. So this is an equity, folks. It's hard to even comprehend that they've stayed alive this long. But the bottom line is that they just halted it. And they're looking, so Pier 1 for the last year, the low was $3, the high was 31. And so what they're looking at here is that Pier 1's planning to dismiss 40% of its headquarters staff, roughly 300 people, and is canceling orders as it works to overhaul the business. The retailer has drafted a bankruptcy plan and last month made a presentation to creditors that envisioned a smaller post-bankruptcy company with $900 million in annual sales. Let me show you something, folks, okay? So first, if we just look at the chart first, what you're going to see out here, this has been a long time coming, but you can see this has been a mess for years. You know, I take this, put this back, what you're going to see out here, 2013, you had, well, the stock is saying $505, but this is reverse splits, folks, in an incredible way. $505 down to $3. That chart-wise, fundamentally, you take a look at their numbers. It's the disaster. Their numbers, folks. 2015, they were doing $1.9 billion. They claimed they were making $9.69. The bottom line is that last year they lost $49 a share. Okay, they're done. They're you know, retailing in general, very tough business. No two ways about that. Their retailing, most of their stores are actually on out parcels at malls or across from malls. Okay, they went with a different plan, and now, of course, what ends up happening, malls are bad enough as they are. If you're a separate store outside of a mall, whole different animal, particularly a different animal in a huge way. We got to take a look at some of the higher volume. Well, actually, let's go take a look at the oil market. So the oil market, bottom line, if we take a look at the active contract, what you're going to see, active contract goes up to a price point of $64.72 today, gives it up. Bottom line, as we did give it up on Friday also. Friday, what we did, we went to $64.09. You end up closing out at 63. Today, you get up to $64.72. You're at $63.01. If I look at this continuous contract, what you're going to see, and this is what the benchmark is, folks. The benchmark is the high that was generated out here on September 16th. So September 16th, it wasn't the day that the Saudi oil fields got bombed. They got bombed on Saturday. The oil futures market opened on Sunday night. That is Monday morning. It went to 63.38, then gave it up in spades. I mean, if we look at this, we closed Friday, picture this, we closed Friday at $54.85, the oil market, the futures market, right? They bang out to 63.38, and guess what? There's so much oil out here, they sold into that so fast and furious, and they sold it right down to $50.99, okay? Bottom line, we get up and over that today, as we did on Friday. Both times gave it up on price. That's telling me that, guess what? Once again, you're going to see this oil market basically, well, the game now is it can get down to $50. It doesn't mean that, it doesn't mean we won't have volatility and you bounce all over the place, but this is saying quite a bit, particularly when you get the aspect that, of course, you're going to have these oil companies paying attention to all the tankers as they're going through all these different canals, and we'll see whether they get hit or don't get hit as a retaliation coming from the Middle East. That being said, guess what? You know, the bottom line is that the market itself is saying that, hey, guess what? We have huge amounts of oil. We have more oil than we know what to do with, and the supply is much larger than the demand. If we go over, take a look at ExxonMobil, these large integrated oil companies have been having a hard time forever. And it's hey, listen, you know, if someone told me this 15 years ago, I'd say, what are you, out of your mind? But look, ExxonMobil trading at 2006 levels. We're at $70.87. That's where it was then. Bottom line, you know, they, even at these higher levels, at a $60 oil, $55 oil, they're still having a hard time making the type of money that the market is looking for. You know, they're paying dividends, but they're really churning almost into utility stock because they are 4.91. That's a decent dividend. There's no doubt about that. If we look at Chevron, Chevron's the same setup. Now, Chevron has been much stronger than Exxon for a long period of time. You can see Chevron, where Exxon was trading at the 2006 levels. You know, this is trading at 2012 levels, but you got to remember we're 2020 now. But, you know, if we bring this back to 2006 levels, you're going to see that Chevron was down at 71. Well, you're $50 over that. So the large integrated oil, meaning Exxon, is a lot weaker than Chevron. I mean, in a monster way, too. Walmart, bottom line, you know, if we take a look at the aspect of, you know, Walmart, Google, Amazon, Walmart's down 59 cents, still consolidating out here. Starting to lose a little price, though. You know, so we'll see if Walmart's going to basically hold on to these. It's been in a high-end consolidation since September. Hasn't been able to move much, but a high-end consolidation. Google took off like a rocket ship today. Google took out its high, has the volume as it's taken out its high. Google got an upgrade this morning, and bottom line is that this baby no doubt took off. You had, let's see, Pivotal Research Group, I'm not even sure who they are, wrote that it's after a critical foundation year. They're basing this on the aspect that they have a new CEO. It's not a new CEO for Google. It's a new CEO for Alphabet. You know, Larry Page and his partner there. The bottom line is that they gave Sundar the CEO of everything now. And the bottom line is that this analyst right here is saying it's going to make a difference. He put a price target on it now of $14.45 to $16.50. And Google did take out its highs with volume. So it marched higher with juice behind it. Amazon's caught a bid out here today. Took quite a while for Amazon to basically catch a bid. Amazon was in a consolidation since last August. And what ends up happening is that it took off like a rocket ship when the numbers came out of the Christmas season. It went from basically went up $80 the day after Christmas, you know, December 26th. And it had volume behind the move, took out the whole consolidation. That puts game on once again for Amazon, 2035. Right now, we're at 1897. Amazon is going to be coming out with their numbers on January 30th. So we're going to be seeing a lot of numbers. The market's going to be looking for those numbers to see exactly what they did do in this holiday season, how much they actually cranked out. Dow Industrials are down 7, Nasdaq's up 32, S&P's up 4.5. Stay right there, folks. Come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow is flat. Nasdaq is up 33. S&P's up 4.5. And there's, 2020. There's volatility, folks, is going to be out here in spades. Technically, fundamentally, we get volatility out here too. This just came across the tape about 30 minutes ago. So John Bolton, bottom line is that he came out saying that he would testify if subpoenaed by during President Trump's impeachment trial in the Senate. And this is on his website. Okay, this is pretty wild, actually, man. It's like, I have concluded that, this is the quote on his website, I have concluded that if the Senate issues a subpoena for my testimony, I'm prepared to testify, Bolton said in a statement posted on his Political Action Committee's website. Prior to this, Bolton's lawyers have stated that he had new relevant information to share, if any, so we'll see where this shakes out. I'm not quite sure how, whether it's a positive or negative. We wouldn't know until he testifies, but it's certainly a wild card. I mean, there's no doubt about that. It's almost like he just threw a bomb in the middle of the in the middle of the impeachment deal, coming out saying flat out on his website that he would testify, because the standoff between Pelosi and Mitch McConnell is the subpoena in general, and what would end up happening if they didn't come to an agreement. What would end up happening is that I do believe they need 4 Republican senators to vote with all the Democrats in order to subpoena someone. So, I mean, that's all but saying, it seems to me that I'm on the website right now, he's all but saying that, hey, man, subpoena me and I'll come. So we'll see where this baby does shake out. We take a look at the dollar. So the dollar, folks, in December had reversed its long trend uptrend. And that uptrend, this is quite an uptrend. It was an uptrend from February of 2018. Now, this is how currencies like to trade, folks. Okay, the bottom line is that they go on long-term trends and, until they don't. And what you're going to see here is that if we take a look at this, the dollar, bottom line, was strong like bull for a long period of time. The first time that it broke down was the second week of December. That's when you had a decisive break. We went from the 98 area down into the 97, 172. You came back. It tried to retest the high. It couldn't get to the top of the trend. That's the real bottom line. And then it broke down again. Now, what does that set up? Well, first off, what it sets up is that it's going to be a test of the bottom of, because you can almost say this is a high-end consolidation also. So 95.5. actually, no, 95.02. So 95, I expect we're going to see in the dollar in the next few weeks. And right now we're at 96,679. We break that, and then game is on for 88. 88 is where this thing took off from in February of 2018, and it very well can go back there pretty quickly. Pretty quickly would be like 6-7 months, not, you know, in the currency markets. That's not going to happen overnight. And the catalyst for that, folks, the first catalyst had to do with, as this was selling off, the British pound. The British pound had taken off, had reached this low. Pull this up. We're trading 131 now inside the British pound. That pound came off its low about three or 4 months ago. The low was 119. When Boris Johnson had that decisive victory over in Europe, in the UK, in the UK, we went from 130 to 135. Then it gave it up in spades, came all the way back up. It's making its way back up to this 135. When you take a look at this pound looks to me that, number one, your next move is going to get you up to that 135 to 143 area, you know, and then it's gonna commit to some heavy flack like in the 148 area, you know. But I suspect that's where we're going. When we bring this back, what you're going to see, when Brexit had started, you know, you're at 171, and that thing just crashed to 118. You're at 131. Bottom line, it's building costs to get back into higher price. So that was the first move, meaning currency-wise against the U.S. dollar. The euro, okay, bottom line, finally had some strength about 5 days ago. Big strength, too. The euro is at 111. That thing bottomed out at 108. The day that we're talking about here is on the 27th of December. That's where the euro picked up some strength. We are at 111 right now, and the way that the euro is set up, that euro right now, the next higher move, I suspect, is going to be about 125. So you can see that now that's a very large move in correlation to the U.S. dollar. The reason being is that the euro is 60% of the dollar, folks, meaning that you're talking about the dollar index. The way that they get the weighted move structures inside there, by the way, have to do with the amount of trade that gets done between the continents. That's how that works. But I do expect you're going to see that, and then, you know, there'll be some flack up at that area in a huge way. But you got to remember the euro, you know, 2008 was trading at 160 euros. We went all the way down to $1. We almost went to par. So you can imagine, you know, when we're talking foreign currency, you're talking about wealth in an extraordinary way. 160. So picture that's you can go like this, like just say it's 160,000 to $1 to 100,000 US, and then all of a sudden you get down to 103,000 euros to 100 US. Now you're at 111,000. That's how that works. That's the easiest way to just cut to the chase inside the foreign currency. Sometimes just use the same number every time so you can kind of understand buying power. Now the yen, okay. The yen is also on its way to get much stronger. And that'd be the third part, which would get the dollar also selling. The yen just went from a price point of 109.71. We're at 108.44. You hit 170, 107. That yen looks to me like it's going to go right down to the very bottom of 105. What does happen, that puts selling pressure inside the dollar in a huge way. You get the pound going against it. You get the euro going against it. You get the yen going against it. Now, as the yen is getting stronger, for all you metal bulls out here, that is a monster move. Because the bottom line is that as the yen gets stronger, the Nikkei in Japan goes out of its mind. It can't handle it. It goes down on price very, very quickly. Gold goes up on price very, very quickly. I mean, and it's a very fast move, folks. The correlation is a direct correlation. Yen stronger, gold stronger in a big way. Dow's up 27. Let's see, inside the Dow, it's catching that bid. So when we take a look at that Dow, even from the lows of the highs today, you're going to see that move. Impressive. 28,418. Guess what? You're up we're up 34 points, but 418, we're 250 points from the low, folks. This thing's going to go right after its high. The highs out there, 28,872. and the strength inside the Dow Industrials. Now, we know that the weighting structures basically skewed because it's a price-weighted index. Apple's putting the juice into the Dow. You get Apple putting 15 points positive, Big Mac 14, Goldman 12. Taken away from it, not a lot. You get Disney taking 7 points, Visa taking 5, American Express taking 4. Stay right there, folks. Come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now up 44, NASDAQ up 45, S&P's up 9. Let's go over into the NQs, because when you take a look at these NQs, folks, that last Friday, as we were talking at the beginning of the show, that baby had broken out in a large way. What I mean by that is that when you get price as well as volume breaking highs, that's the kind of high that I like to see how it's broken. And it had it. That's the bottom line. And guess what? You know, this baby right here, you know, the high inside the NASDAQ 100 futures is 8,907. I suspect we're going to see it tomorrow. You know, we just moved from 87.23 to 88.63. Okay, so you're talking about a 140-point move today alone. Now, the NQs love to move like that. There's no doubt about it. And inside the NQs, Google's going to be the monster out here today. You get them all. You get Netflix is up 3.1%. That's trading up $10.21. You get Vertex up 2.8, and then you get Google. Google's up 2.59. And what you're going to see in Google, by the way, too, if you happen to be watching my screen, you're going to see Google 2.59, Google 2.46. Well, you got to remember Google has two different equities. They have their equity that basically has less voting rights. Then they have the equity. Yeah, they're both trading the same price. Yeah, one has voting rights and one doesn't. Bottom line, though, inside the Index 100, they both have a weighting structure. And so that totally does make a difference inside the Index 100 when those babies are moving and moving in a large way. And, you know, you can see it in spades. Amazon's also blasting, that's up $27. You get ABMD, Med, that's up also. Bottom line, the NQs want to basically hit or at least test that high. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. You might as well have a blast with it. Come back. Visit us tomorrow morning. Larry Pizzavento kicks us off 9 o'clock. Have a great one, folks.